Hello and welcome back to my channel. In this video, I will talk about sales and sales returns, purchases and purchases returns, recording these transactions to Daybooks, and then to general ledger and subsidiary ledgers. Let's start with the sales and sales returns transactions first. This example is a list of transactions of ABC Limited pertaining to sales and sales returns. And then we are going to enter them one by one into either sales daybook or sales returns daybook. First, on the 2nd of June, ABC Limited sent invoice number 1055 to customer A amounting to 720 including VAT at 20%. When we say ABC Limited sent invoice to a customer, it means ABC Limited made a sale. The amount says 720 including VAT. It means this amount is our gross amount. Since this transaction is a credit sale, let's enter this into our sales daybook. Enter the details like date, customer name, and invoice number. And then we will enter the 720 in the total columns since that is the gross amount. Next column is VAT. From gross amount 720, let's divide it by 6. And we got 120 for VAT. Next is the net column. From 720, let's divide it by 120% or 1.2. We got 600. Then let's double check our computation. Let's add VAT plus the net amount and it should be equal to our total. If you want to know how to compute the net VAT and total or gross amount, please watch it in my Introduction to Bookkeeping Part 3 video, and I will put the link up in the corner or in the description below. Next, on the 4th of June, ABC Limited sent invoice number 1056 to customer B amounting to 500 plus VAT at 20%. It means ABC Limited made another credit sale, so we will enter this into our sales daybook. The amount 500 plus VAT at 20%, it means the 500 does not include the VAT yet. It means this is the net amount. Let's enter the details like the date, customer name, and invoice number to our sales daybook, and the amount to our net column. To get the total amount from the net amount 500, we will multiply it by 120% or 1.2, and our total amount will be 600. To get the VAT from the net amount 500, we will get the 20% or multiply it by 0.2. We got 100. Let's double check our computation, add the VAT and the net amount, and we should get the total amount. Next, on the same day, ABC Limited sent credit note number 1010 to customer A amounting to 60 including VAT at 20%. In this example, ABC Limited sent a credit note to customer A who returned some defective goods. The amount is 60 including VAT at 20%, so that means it's the gross amount. Now we will enter this transaction into our sales returns daybook. Let's enter the details like date, customer name, and credit note number. And the amount in the total column. Let's get the VAT from the gross amount 60 divided by 6 equals 10, and that is our VAT. Let's get the net amount from the total 60 divided by 120% or 1.2, and we got 50. Again, let's double check by adding VAT and net amount should be equal to the total amount. Next transaction, ABC Limited sent invoice number 1057 to customer C amounting to 750 plus VAT at 20%. ABC Limited made another credit sale, so we will enter this to our sales daybook. The amount 750 plus VAT, it means it is the net amount. Let's enter the details like the date, customer name, and invoice number, and the 750 to our net column. Let's get the total amount from the net amount 750 times 120% or 1.2. We got 900, and that is our total amount. Let's get the VAT from the net amount 750 times 20% or 0.2. We got 150, and that's our VAT. Let's check by adding VAT and net amount. It should be equal to the total amount. For our last transaction, ABC Limited sent credit note 1011 to customer B amounting to 180, including VAT at 20%. This credit note is for the returned defective goods of customer B. So we will enter this to our sales returns daybook. The amount 180, including VAT, it means it is the gross amount. Let's enter the details like date, customer name, and credit note number. Let's enter 180 to our total column. Let's get the VAT amount from the total amount 180 divided by 6. We got 30. And then let's get the net amount from the total amount 180 divided by 120% or 1.2. We got 150 for the net amount. Again, let's double check by adding VAT and net amount. We should get the total amount. At the end of the period, the sales daybook and sales returns daybook are being totaled and transferred to the general ledger and subsidiary ledger. So now I have totaled each column. Add the total of the VAT and the net column. It's 40 plus 200, and you'll get 240, and that should be the total of the total column. And do the same to double check the totals in the sales daybook. Next, let's move on to purchases and purchases returns transactions. This example is the list of transactions of ABC Limited pertaining to purchases and purchases returns, and we are going to enter them one by one to either purchases or purchases returns daybook. On the 1st of June, ABC Limited received an invoice number 792 from supplier A amounting to 545 excluding VAT at 20%. It means ABC Limited made a purchase from supplier A and the amount does not include VAT or it's the net amount. Let's enter the details to our purchases daybook like the date, supplier name, and invoice number, and the amount to our net column. To get the total amount from the net amount 545, let's multiply it by 120% or 1.2. 654 is our gross amount. To get the VAT from the net amount 545 times 20% or 0.2, 109 is our VAT. Again, to double check, add the VAT and the net amount and you should get the total amount. Next, on the 3rd of June, ABC Limited received a credit note number 42 from supplier A amounting to 81.75 plus VAT at 20%. When we receive credit note from our supplier, it means that we have returned defective goods to our supplier, so we will enter this to our purchases returns daybook. The amount is 81.75 plus VAT, so it means it is the net amount. Let's enter the details like the date, supplier name, and the credit note number, and the amount to our net column. To get the total amount from the net amount, 81.75 times 120% or 1.2, 98.10 is our gross or total amount. To get the VAT from the net amount, 81.75 times 20% or 0.20, 16.35 is our VAT. To double check, add the VAT and the net amount and you will get the total amount. Next, on the 5th of June, ABC Limited received an invoice number 301 from supplier B amounting to 360 including VAT at 20%. We have received another invoice from a different supplier, so it means we have made another purchase and we will enter this into our purchases daybook. The amount includes VAT, so it means it is the total amount. Let's enter the details like date, supplier name, and invoice number, and the amount to our total column. To get the VAT from total amount 360 divided by 6, 60 is our VAT amount. To get the net amount from the total amount 360 divided by 120% or 1.2, 300 is our net amount. Double check by adding VAT and net amount and you should get the total amount. At the end of the period, each column should be totaled and the total should be transferred to general ledger and subsidiary ledger. I have totaled all the columns, and again you have to double check your computation by adding the VAT and the net amount. It should be equal to the total amount. Now let's move on to recording daybooks to general ledger and subsidiary ledger. In recording to general ledger, we are only going to record the totals from the daybooks. First, let's find out the required entries to general ledger, which are the account, amount, and either debit or credit. Each total amount in the sales daybook will be transferred to an account in the general ledger. So what are those accounts? First is RLCA or Receivables Ledger Control Account. In your textbook, you may encounter different terminologies like SLCA or Sales Ledger Control Account, Trade Receivables Debtors or Trade Debtors. Please take note that they all mean the same. So the total of our total or gross column goes to RLCA. VAT goes to VAT account, and then the net amount goes to sales account. Now let's transfer the amount, RLCA, VAT, and sales amount. Now which side should I go, either debit or credit? To determine this, you have to pay attention which daybook they came from. We are transferring from sales daybook where we recorded sales. So first, RLCA is an asset. When we made sales, it increases and it goes to debit. Let's go to sales next. Sales is an income, and when we made sales, it increases, so it goes to credit. And last is VAT. It just goes with the sales, so it's credit. Now let's move on to sales returns daybook. Each total amount will be transferred to an account in the general ledger. So what are those accounts? First is RLCA for the total, and then for the VAT, it's VAT account, and for the net, it's sales returns account. So you will notice that the accounts are the same, RLCA and VAT. The only difference is the sales and sales returns account. Then let's transfer the amount, RLCA, VAT, and the sales returns amount. Now which side should I go, either debit or credit? Remember, we are transferring from sales returns daybook where we recorded sales returns. First, RLCA is an asset. When goods were returned to us by our customers, it means they no longer have to pay for this amount of goods, so our RLCA will decrease and it goes to credit. Let's do sales returns next. Sales returns decrease our sales, which is an income, so it goes to debit. Then VAT goes with the sales returns, which is debit. In general ledger, the accounts would look like this. Just a reminder, always remember the dual effect. The amount that you enter in the debit should always be equal to the credit. Let me show you an example. In RLCA, let's enter the amount. The date is the end of the period. In the details column, I will put the title of the account or accounts of the opposite entry just to show you the dual effect. So this amount is equivalent to the sum of sales and VAT. So I will put sales and VAT. Now let's go to those two accounts. For the sales, let's enter the amount. For the details, let's enter the title of the account of the opposite entry, which is RLCA. The date is the end of the period. Next, let's go to VAT. Let's enter the amount, which is 370. And the date is the end of the period. And for the details, it's the title of the opposite account, which is RLCA. So I will do the same for the sales returns daybook. So I will just come back when I'm done. So now I'm done transferring from sales returns daybook. It's just the same as what we did in the sales daybook. So this is how they look like in the general ledger. The next thing that we're going to do is to transfer to subsidiary ledger. It also comes in many different terminologies. Sometimes you may encounter ledger, memorandum ledger, or individual account. Receivables ledger is one common type of subsidiary ledger. It also comes in different terminologies like sales ledger, receivables, or individual customer account. It contains transactions of individual customer. So from sales daybook, we have to record the total or gross amount of each customer's transactions one by one. We will enter them in the same side where we enter the RLCA. So we will enter them in debit. First is customer A, 2nd of June, 720. Let's go transfer this to customer A individual account, debit. In the details, let's put sales daybook. Next is customer B on the 4th of June, 600. So let's enter this to customer B's individual account. Enter the amount and the date. And the details is sales daybook. Next is customer C, 7th of June, 900. Let's enter this to customer C's individual customer account. Let's enter the amount and the date, and the details is sales daybook. Let's do the same for sales returns daybook. We have to record the total or gross amount of each customer's transactions one by one as well. And again, we will enter them in the same side where we enter the RLCA, which is credit. First is customer A, 4th of June, 60. Again, we will record it to the same side where we record RLCA, which is credit. So let's go to customer A, record the amount, the date, and the details is sales returns daybook. Next is customer B, 7th of June, 180. Let's record it to customer B's individual account. Let's record the amount, the date, and the details is sales returns daybook. Now let's move on in recording purchases and purchases returns daybook to general ledger and subsidiary ledger. We will do the same as what we did in sales and sales returns. Always remember to pay attention to what type of daybooks you are getting the entries from. Let's find out the required entries in the general ledger, which are account, amount, and either debit or credit. PLCA means Payable Ledger Control Account, but it also comes in different terminologies like Purchase Ledger Control Account, Trade Payables, Creditors, or Trade Creditors. The total of the total column goes to PLCA. Second, the VAT goes to VAT account. And then third, the net goes to purchases account. Now let's transfer the totals from each column. Next is to find out which side should they go, either debit or credit. Again, let's pay attention to which daybook they came from, which is Purchases Daybook. First is PLCA. PLCA is a liability, so when we made purchases, PLCA increases, so it goes to credit. Let's go to purchases next. Purchases is an expense, and when we made purchases, it increases and it goes to debit. And the VAT goes with the purchases, which is debit. Now let's move on to the purchases returns. Let's do the same thing as we did to the purchases. First, let's determine the account. The total of our total or gross column would go to PLCA. Next, the VAT would go to VAT account. Next, the net goes to purchases returns account. Then let's transfer the amounts. Then let's determine which side they go, either debit or credit. First is PLCA. PLCA is a liability, so when we return goods to suppliers, it means that we no longer have to pay for those amount of goods. So our PLCA will decrease and it goes to debit. Let's do the purchases returns next. Purchases returns decreases our purchases, which is an expense, so it goes to credit. And the VAT goes with the purchases returns, which is credit. In general ledger, the accounts would look like this. Always remember the dual effect. I'll show you an example. In PLCA, the amount is 1,014. So let's enter the amount. The date is the end of the period. In the details, to show you the dual effect, I will put the title of the account of the opposite entry, which is the VAT and the purchases, because the total of these two is equivalent to our PLCA. Then let's go to purchases account. Let's transfer the amount and the date and of the period and the details. It's PLCA. Then let's go to VAT account. Let's enter the amount, the date, and the details. It's PLCA. And I'll do the same to purchases returns daybook, and I will come back when I'm done. Okay, so now I'm done transferring both to the general ledger, and this is how they look like. So the next thing that we're going to do is to transfer to subsidiary ledger. Payables ledger is also one common type of subsidiary ledger. It contains transactions of individual supplier. It's also called payables. So from purchases daybook, we have to record the gross amount of each supplier's transaction one by one. And we will enter them in the same side where we enter the PLCA, which is credit. So first is supplier A, 1st of June, 654. So let's go to supplier A. Let's enter the amount, the date, and the details is purchases daybook. Next is supplier B, 5th of June, 360. Let's go to supplier B. Let's enter the amount, the date, and the details. It's purchase daybook. And from the purchases returns daybook, we will do the same. We only have one return, supplier A, 3rd of June, 98.10. So let's go to supplier A. Let's enter the amount, the date, and for the details, it's purchases returns daybook. Now let's summarize everything that we have done so far. First, when we have sales, we create customer invoice and send it to the customer. And then we entered it to the book of prime entry, which is called sales daybook. Then after a period, the total of the sales daybook will be entered to the general ledger and the individual transaction to the subsidiary ledger. In general ledger, we enter in RLCA, VAT, and sales account. In subsidiary ledger, we enter to receivables or individual customer account. Next, when we have sales returns, meaning our customer returned defective goods to us, we issue customer credit note. We enter the credit note to the books of prime entry called Sales Returns Daybook. And then after a period, the total of sales returns daybook will be transferred to general ledger and the individual transaction to the subsidiary ledger. In general ledger, we enter in RLCA, VAT, and sales returns account. In subsidiary ledger, we enter in receivables or individual customer account. Next, let's go to the purchases and purchases returns transactions. First, when we made a purchase, we receive an invoice from our supplier. Then, we record it to the books of prime entry, which is called Purchases Daybook. After a period, we enter the total of purchases daybook to general ledger and the individual transaction to subsidiary ledger. In general ledger, we enter in PLCA, VAT, and purchases account. In subsidiary ledger, we enter in payables or individual supplier account. Next is purchases returns transactions. It means that we have returned defective goods to our supplier. We receive credit notes and we record it to the books of prime entry called Purchases Returns Daybook. After a period, we record the total to general ledger and the individual transaction to the subsidiary ledger. In the general ledger, we record in PLCA, VAT, and purchases returns account. In subsidiary ledger, we record in payables or individual suppliers account. And that's it for this video. I hope you find it useful. If you want to watch more videos like this, please give us a thumbs up and subscribe to our channel. Thank you for watching.